Assalamualaikum. My name is Normaisal binti Mawardi from BA 1195A.
Hi, Assalamualaikum. My name is Nur Anda Nabila binti Jati. I am from BA 1195A.
Assalamualaikum. My name is Siti Nurhaja Ashikin binti Roslan.
Hi and Assalamualaikum. My name is Cikgu Aizi Numayas binti Cikgu Ahmad and my matric number is 2020957313.
Hi, Assalamualaikum. My name is Nur Anda Ashikin binti Mahmud. I from BA 1195A.
A financial entity with permission to accept deposit and issue loan is known as a bank. Additionally, bank may offer financial service including safe deposit box, currency exchange and asset management. Retail banks, commercial or corporate banks, and investment bank are just a few of the various types of bank. The national government or central bank controls banking in the majority of the world's nation. Meanwhile, a blockchain is a shared distributed database or ledger between computer network nodes. A blockchain server as an electronic database for storing data in digital form. The most well-known use of blockchain technology is for preserving a secure of decentralized record of transaction in cryptocurrency system like Bitcoin. The innovation of a blockchain is that it fosters confidence without the necessity of a reliable third party by ensuring the fidelity and security of a record of data. The way the data is organized in a blockchain differs significantly from how it is typically organized. In a blockchain, data is gathered in group called block that each include set of data. Block has specific storage capabilities and when filled, they are sealed and connected to the block that came from them to create the data chain known as the blockchain. Every additional piece of information that comes after that newly added block is combined into a brand new block, which is then added to the chain once it is full.
Today, I want to present about the type of blockchain's application. There are two main categories of blockchain are private and public. Consensus and hybrid blockchain are just two examples of the many variants. Let's first explore the similarities across the various blockchain kinds before delving deeper into their specific. Each blockchain is made up of a group of nodes that operate in a peer-to-peer network structure. A copy of the shared ledgers that is timely updated and stored on each node in a network. A node capabilities include the ability to create blocks, send or receive transactions, and verify transactions. The first type of blockchain is a public blockchain. A distributed ledger system without constraints and permission is known as a public blockchain. Anyone with the internet access can sign up on the blockchain platform to join the network as an authorized node and become a part of the blockchain. It is a permitted for a node or user who is a part of the public blockchain to view, receive, and all records, confirm transaction, or complete proof of work for an incoming blocks, and engage in the meaning and trading of the cryptocurrencies is the most fundamental usage of public blockchain. As a result, Bitcoin and Bitcoin blockchain are the most widely used public chains. If users adhere to security policies and procedures to the latter's, public blockchain are generally secure. However, it is only dangerous when the participants don't really adhere to the security rules. The second type of blockchain is a private blockchain. A private blockchain exclusive permission based on blockchains that only functions in a closed network. In organizations or business mergers, a few people are allowed to participate in a blockchain network. Private blockchains are typically employed. The controlling organization is responsible for determining the security, authorization, permission, and accessibility levels. The use of private blockchain is therefore comparable to that of a public blockchain, but they have a contrasted and tiny network. Voting, supply chains management, digital identity, access on ownership, and other uses employ private blockchain network. Next is the types of blockchains is consortium blockchains. A consortium blockchain is a semi-decentralized kind in which a network of blockchains is controlled by multiple organizations, contrary to what we observe with a private blockchain, which is controlled by only one company. This is not the case. In this kind of blockchains, multiple organizations may be function as a node, exchanging data or engaging in mining. The typical user of consortium blockchains include financial institutions, governmental bodies, and others. The last one, the type of the blockchain, is a hybrid blockchain. A hybrid blockchain combines the feature of the public and private blockchains. It makes use of both the private permission-based on system and the public permission-less system aspect of the blockchains. User can manage who has access to what data stored in the blockchain with the help of such a hybrid network. Only a specific subset of the blockchain's data
Now,
or
I will
record
explain about
can
the
be
working
made
method.
public,
Enterprise
keeping the
networks
rest
use
secret
blockchain
and
and also unchanged privileges.
confidential.
It is in order
Your
to record
user can
transactions and
simply
track assets.
combine a
It is
private
a method of
blockchain
storing
with
information
several
that makes it
public
impossible
blockchains
for anyone
thanks
to
to
enter,
the
hack, or
flexibility
cheat it.
of the hybrid
Transactions like
blockchain
this can
technology.
resolve quickly.
Typically,
People who are
a
aware of this rule are
A
often
hybrid
hesitant to use
blockchain's
this type
private
of
network
transaction,
various
which is why
verifies a
third-party
transaction
payment programs
that
have
has
been
taken
developed over
place
the
there.
past few years.
To get
As a result,
validated,
blockchain
user
is a
can
cutting-edge
also release
technology
it
that
on
allows
the
users
open
to store
blockchain.
information securely.
More nodes
A
are
blockchain is a
required
database
for
of nature that is
verification
shared
on
between
one
nodes of a
blockchain,
computer
increasing
network.
hashing.
Blockchain serves
The
as an
blockchain
electronic
network
database to
is
store
made
data in
more
digital form.
secure and
The main reason
transparent
why blockchains
as a
are so
result.
important for cryptocurrency system is because of this. It is used to keep a decentralized and secure transaction record. The innovation of blockchain is that it fosters confidence without the need for a reliable third party by ensuring the fidelity and security of data records. Blockchain is a digital ledger that has recently attracted a lot of interest and appeal in terms of technology. Blockchain is a young technology with multiple benefits in a world that is becoming more and more digital, including highly secure, decentralized systems, and also automation capabilities. Now, we go to the first one, which is authentication. There is an element of validation that is stronger than the others. In each situation, the level of protection depends entirely on the information you are trying to access. The user or machine must show the identity to the server or client during authentication. A username and password are usually required for server authentication. Card-based authentication, retina scanning, voice recognition, and also fingerprint authentication are future options. When a customer requests verification, the server typically sends a certificate to the customer that is signed by a trusted third party. Second is authorization. The server evaluates if the client has permission to use resources or access files through authorization procedures. A blockchain network agreement is a set of guidelines that governs the way it works, and it is also approved data input into the grid. Number 3 is proof of work. It is a method used by cryptocurrencies. It is in order to check the validity of newly added transactions on a blockchain. And last but not least is mining. Mining is a process of improving current public records with conditional runs. It is in order to ensure the safety of the entire block without the need for a central organization and Mining also requires a unique job formation for block exchange. Thank you.
A financial institution with permission to lend money and accept deposit is known as a bank. Deposit and loan product, credit cards, online banking, investment instruments are the service offered by banks. One of the advantages of bank is safety of public wealth. As we know, people used to keep their money in hard cash before the advance of the modernized banking system. But there is no longer any need to keep actual currency on hand, especially with the current banking system. Second, availability of cheap loans. Before the establishment of modern banks, people would borrow money from local moneylenders, landlord, business owner, or other rich people. Modern banks began offering less costly loans to the less fortunate segment of society, shattering the entire system of pricey loans. Third, economy of large scale. Any bank's extensive reach through the branch banking system and the advantage of large-scale operation are both very significant advantages. The bank can offer greater service the more it can spread its wings. Banks now provide services like net banking, card payments, ATM, and others. Besides that, banks also have a disadvantage. First is risk of fraud and robberies. Cybercrime has increased along with the use of online banking. More individuals are now at risk from credit card fraud, password theft, net banking fraud, and others. Second, risk of public debt. This is the risk that consumers take on themselves when interacting with a bank, not the risk that the bank itself is exposed to. If someone has a tendency of messing out their credit card each month and just making the minimal payments, they will quickly become insolvent. Actually, taking on debt that one cannot afford to repay is a terrible habit that belongs to the individual. And the third is there is a big change that bank going bankrupt. This is because every few years there are turbulences in the global economy. Events that expose banks to unnatural risks include the Great Depression of 1929, World War I and II, the dot-com boom of 2000, the Great Recession of 2008, and others. Meanwhile, blockchain is a distributed digital ledger that may store any form of data. Cryptocurrency transaction, NFT ownership, or DeFi smart contract can be all recorded on a blockchain. The advantage of blockchain is distributed. The system and the data are extremely resilient to the technological failures and malicious absolute since blockchain data is frequently stored across thousands of devices on a distributed network of nodes. Second, stability. It is exceedingly difficult to delete or alter data after it has been added to the blockchain, since confirmed blocks are very unlikely to be overturned. Due to the fact that every change is tracked and permanently recorded on a distributed and public ledger, blockchain technology makes sense for the storage of financial record or any other type of data where an audit trail is necessary. Third is trustless system. Transaction in the majority of conventional payment system depend on a third party as well as the two party directly engaged, such as a bank, credit card payment, or payment provider. Lastly is the advantage of blockchains. The first one is data modification. The inability to change data once it has been committed to a blockchain is another drawback of blockchain technology. Why consistency is one of the benefits of blockchain. It is not necessary, it's good thing. Blockchain data or code change are typically accidentally, laborious, and frequently need a hard fork, in which one change is dropped and a new one is adopted. Second is inefficient. Blockchains are incredibly inefficient, especially those that employ proof of work. The labor of every other miner is useless since mining is extremely competitive and there is only one winner every 10 minutes. And the last one is closing talk. Despite its drawback, blockchain technology offers certain distinctive benefit and is undoubtedly here to stay. Although there is still a long way to go before blockchain technology is widely used, several businesses are beginning to understand its benefits and drawbacks.
Today I want to explain about how blockchain affects financial service. Blockchain technology has received a lot of attention over the past 10 years, going beyond the price of a small group of Bitcoin fans and into the mainstream discussion among financial experts and investors. However, this technology is not limited to the financial area. For the information, blockchain technology has changed the business model and the technical characteristics of traditional banks. At the same time, blockchain can make the financial service sector has a great deal of potential to become more transparent, less prone to fraud, and more affordable for consumers. Here are some of the how blockchain affect financial service. The first one is through the use of blockchain technology, the direct connection between two parties can be established without the need of corresponding banking. Because blockchains are decentralized and have impenetrable ledgers, the financial institution may do away with the numerous levels of fraud protection that currently exist. For example, in order to complete a transaction between parties in Australia and the US, Welfare and the Commonwealth Bank of Australia used blockchain last year and it making history in the process. Secondly, blockchain added more security. It is because blockchain technology provides immediate clearing of the transaction as the entire process of the transaction occurs at the same stage. As a result, a trade will be treated as a digital asset and centered in a blockchain without the need to pass through several levels as is necessary with a regular deal. This change in trade clearance and similar process will greatly impact the consumer. Thus, if the organization understands the impact on the customer, even the positive or negative, they will provide strategic initiatives that will give more successful and forward-thinking. Thirdly, if blockchain platform used in stock trading, it will reduce trading errors and at the same time it will less delay in trade completion. As we know, whether done intentionally or not, the digital information from the original owner that not utilizing the blockchain can be replicated. Because of that, the capability of using blockchain will increase intellectual property protection since the owner will have keep a control over the specific asset. Last but not least, how blockchain affects financial service is blockchain ledger cannot be manipulated. Because of that, employers would not have been able to manipulate the record and verify identity as easily due of the impossibility in manipulation the blockchain ledger. At the same time, if the record were manipulated, it will be uncovered soon. As the conclusion, no wonder many financial service industries starting to move toward blockchain adoption. It is an innovation that has to revolution the global financial system and making it to more secure and efficient. It is because there are many of the way in how blockchain technology is enhancing to the global financial service industry.
So next, I'm going to present about the benefits of bank. Firstly, the payment and remittance system is the modern economy lifeblood. The system makes it simple for individuals and businesses to conduct transactions. Secondly, encourage the development of a progressive and inclusive Islamic financial system. The bank remains committed to advising Islamic finance by focusing on long-term economic recovery, social and climatic resilience, and halal trade. In addition, promote a financial system that is progressive and inclusive. The bank is dedicated to promoting a progressive and inclusive financial system capable to providing the best services to Malaysian economy. Lastly, to encourage financial stability. In promoting monetary stability, the bank seeks to implement monetary policy aimed at keeping the general price level of goods and services low and predictable while taking economic development and prospects into account. Next is the benefits of blockchains. First is cost savings. The nature of blockchain can also help organizations save money. It improves transaction processing efficiency. It also reduces manual tasks like data aggregations and editing, as well as reporting and auditing process. Secondly, traceability and visibility. Blockchain is about more than just speed. This enables retailers such as Walmart to better manage inventory, respond to issues or questions, to confirm the histories of their products. Furthermore, immutability. Immutability simply means that transactions cannot be changed or deleted once they have been recorded on the blockchain. All transactions on the blockchain are time-stamped and date-stamped, creating a permanent record. As a result, blockchain can be used to track information over time, allowing for a secure and reliable audit of data. And the last one is individual data control. According to experts, blockchain enables unpredicted levels of individual controls over one's own digital data. Individuals and organizations can choose which part of their digital data to share or to withhold and for how long, with limit imposed by blockchain enables smart contracts.